Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, December 18th, 2025, and here is everything you need to know as the markets close for today. The Indian stock market ended the day with a distinctly muted tone, as benchmark indices settled almost flat after a full session of consolidation. Nifty 50 closed at 25,815.55, down just 3 points or 0.01%, while the BSE Sensex declined 77.84 points to finish at 84,481.81, a dip of 0.09%. Bank Nifty reflected similar caution, settling at 58,912.85, down 13.9 points or 0.02%. The broader market sentiment stayed neutral throughout the session, with investors staying on the sidelines ahead of crucial U.S. consumer price inflation data expected overnight. Market breadth painted a cautious picture with declines outnumbering gains by a ratio of more than 1.3 to 1. The rupee continued its recent weakness, closing at 90.52 to the US dollar, up slightly from the prior session, but still reflecting a significant depreciation trend that has seen the currency hit record lows near 90.42 just earlier this month, adding cost pressures on dollar-paying importers and creating some tailwinds for dollar-earning sectors. Leading the gainers today were Interglobe Aviation with a surge of 2.72%, followed by Tata Consultancy Services up 1.94%, Tech Mahindra gaining 1.72%, and Infosys up 1.51%, driven by IT stocks, staging a strong recovery as IT and financial sectors climbed more than 1% each. HDFC AMC jumped substantially following a SEBI circular on mutual fund regulations concerning expense ratios and exit loads, with asset management stocks gaining momentum across the board. On the flip side, Sun Pharmaceutical Industries fell 2.74% as the biggest loser, while Power Grid declined 1.15%, Asian Paints slipped 0.89%, NTPC dropped 0.82%, and Larsen & Toubro dipped 0.75%. Among mid-caps, notable movers included PB Fintech, Oberoi Realty, and Vodafone Idea, which appreciated between 3 to 7%, while stocks like Bharti Airtel, BHEL, and Hero MotoCorp saw declines ranging from 1 to 4%. In the small-cap space, stocks like Radico Chem Foundation and Crompton witnessed gains of 3 to 6%, whereas Ola Electric slumped 4.98%, alongside Aegis Vopak and MRPL experiencing declines of 2 to 5%. On the support and resistance front for Nifty 50, immediate support is consolidating in the 25,700 to 25,750 zone, which held firm today and acted as a crucial demand area. Breaking below this band could accelerate selling pressure toward 25,500 to 25,600. On the upside, the 25,900 to 25,950 level remains the near-term resistance zone, with the psychological 26,000 mark serving as a key barrier that the index needs to convincingly overcome to shift sentiment back to positive. For Bank Nifty, support sits near 58,500, with resistance building around 59,500, where fresh selling may emerge. Sector-wise performance remained mixed, with IT stocks emerging as the strongest performer, gaining over 1%, while financials also posted solid gains. Consumer discretionary stocks, particularly aviation, benefited from a relief rally in Indigo after recent operational challenges. Conversely, pharmaceuticals, metals, and power stocks remained under pressure throughout the session, with energy stocks also trading lower as crude oil prices faced headwinds despite geopolitical concerns. Today brought a significant regulatory development as Union Finance Minister Nirmala Sitharaman introduced the Securities Markets Code Bill 2025 in the Lok Sabha on Thursday, seeking to consolidate decades-old capital markets laws into a single unified framework. This historic bill aims to merge the SEBI Act of 1992, the Depositories Act of 1996, and the Securities Contracts Regulation Act of 1956 into one comprehensive code. The government emphasized this modernization is essential, given that existing laws no longer align with evolving market practices and latest technology developments. The new code promises to strengthen investor protection, reduce compliance burdens, and introduce principle-based governance, including mandatory transparency in SEBI decision-making, periodic regulatory reviews, and post-tenure restrictions preventing SEBI leadership from joining government or market entities for 1 year after leaving office. This long-awaited consolidation could significantly reshape India's capital markets landscape by improving regulatory clarity and attracting greater participation. On the commodity front, MCX gold and silver prices pulled back from recent highs as profit-taking set in ahead of the US inflation print. MCX gold February contracts traded at approximately 1,34,619 rupees per 10 grams, reflecting a decline of 0.20% from prior close levels. MCX silver March contracts slipped to around 2,05,870 rupees per kilogram, down 0.66%, after having hit an all-time peak of 2,07,833 rupees per kilogram just yesterday. Both metals remain structurally strong with safe haven demand and industrial buying providing underlying support, though near-term consolidation appears likely. Crude oil, despite geopolitical tensions surrounding Venezuela, showed limited upside momentum, with West Texas Intermediate hovering around $57 per barrel, as adequate global supplies limited rally potential. Geopolitically, the markets had one eye on escalating tensions in the Caribbean as President Trump announced a total blockade on all sanctioned oil tankers entering and leaving Venezuela, declaring the Maduro regime a foreign terrorist organization. This marks an intensification of economic pressure on Venezuela and raises concerns about energy supply disruptions, though current market conditions suggest sufficient crude inventory to weather near-term supply concerns. Alongside this, investors were also monitoring U.S. inflation expectations, with the Consumer Price Index report set for overnight release, which could materially influence risk sentiment and currency movements going forward. Looking ahead to tomorrow's session, Nifty 50 needs to convincingly close above the 26,000 psychological level to shift the near-term bias back to positive and open the door toward 26,300. As long as support at 25,700 holds, the broader uptrend structure remains intact despite current consolidation. Bank Nifty faces a similar situation with key support at 58,500 and resistance at 59,500 requiring attention. The tone for tomorrow will likely be set by the outcome of tonight's US inflation data. A hotter-than-expected print could weigh on emerging market sentiment and trigger fresh rupee weakness, potentially pressuring IT and pharmaceutical stocks despite their dollar earning advantage. Conversely, a softer inflation reading could spark a relief rally, particularly in banking and financial services stocks. Traders should remain alert to position squaring ahead of year-end and be prepared for elevated volatility. Here is today's actionable takeaway. Given the flat to negative close on marginally lower volatility and the resistance building at 26,000 on Nifty, we recommend a cautious buy-on-dips approach for medium-term investors, particularly targeting the 25,700 to 25,600 support zone. For day traders, however, the narrow trading range suggests keeping position sizes manageable until the index decisively breaks above 25,950. The rupee weakness presents a tactical opportunity to accumulate quality IT and pharmaceutical stocks on dips, as these sectors benefit from favorable currency tailwinds. Stay tuned for tomorrow morning's wrap-up and send in your questions. Thank you for joining today's market update. We will be back tomorrow with everything you need to know as markets open. Until then, stay informed and stay invested.